Good evening, everyone. Welcome to another enlightened session focused on my price action based technical analysis. In this video, we will thoroughly examine the GBP USD chart from a technical perspective. The start of the previous week witnessed a significant selling pressure on the pound sterling, but eventually we observed a shift in the market dynamics as buying pressure emerged around the 1.26 level, as you can see on the daily time frame. Recognizing this opportunity, we positioned ourselves for potential buy opportunities, so it was more of a roller coaster of buys and sells during the previous week. Now, as we prepare for the upcoming week, I have conducted a comprehensive analysis of the current market structure to identify potential trading opportunities that we can capitalize on. And throughout this video, I will be sharing my insightful findings with you, accompanied by simple setups that will enable us to effectively navigate the market structure. As always, our analysis will heavily rely on trend lines, key levels, and of course, chart patterns, which we will use to provide ourselves with valuable insight into the historical price movements. And with this information, we will be able to make well informed trading decisions in anticipation of the new week. But before diving into the details, let's take a moment to recap the key moment from the previous week where we, despite the fact that we had a couple of stop losses, we stayed afloat and scooped in over 350 pips in profit from multiple entries. So without further ado, let's dive right into the business. So right here on the first day of last week's trading session, we were able to spot a range where price action was initially caught within the 1.274 and the 1.27100 area, where we were expecting either a breakout or breakdown of that channel to give us an opportunity to buy or sell. And in fact, we had the privilege of buying as we had our buy stop order triggered, but it didn't last long before we were taken out of that position in a loss. And as you can see, we had some couple of opportunities before we started seeing signs that sellers are likely going to be dictating the pace. And with the situation there, we had our first sell position triggered, and we continue to add more position to our existing trade to maximize the potential of that move. And we were lucky enough to ride the move all the way into the 1.26100 level where it hit our TP target. Then later on, we begin to see some buy pressure resume, which also incited the idea of thinking of buying the GBP USD if a breakout retest of the 1.265 happens. And as you can see, we saw the breakout structure happened with part of the move to the upside. So it was more of a buying opportunity during the second half of last week. And it was on this note we were able to close the week on a bullish note. For those who would like to review these commentaries for educational purposes, I already have the link to these commentaries in the description box of this current video. And if you are watching this from my YouTube channel, you will be seeing the link at the top right hand side of your screen. So, with that being said, here, let's dive right into the business for today. And right here, the first thing I was able to do was to scale up into the daily time frame where I was able to identify the simple setup. And if we look at what has been going on in this market in the last I think about 6 to 7, 8 weeks now, it is quite obvious that price action has been bullish. And to emphasize the importance of the buyers in this market, I was able to connect a series of higher lows, which gave us this beautiful ascending trend line, which definitely we are going to be using to guide our trading activity for this week. Then, in addition to this trend line, is this key level situated at the 1.26100 area. And in fact, if you take into consideration how price action has been reacting to this level since the beginning of the month of May, you would realize how important this level is as regards to deciding where price action will be moving to. Now, look at what happened around this area at the beginning of the month of May. It was more of a selling niche at that point before we finally witnessed a breakout of the structure during the second week of the month of June. And by the end of the month of June, we saw price come back into that structure, followed by an engulfing bullish candle with signs that we might likely be seeing a trend continuation to the upside. And one important thing about this whole structure is the fact that the ascending trend line we identified here also shares a beautiful confluence with the 1.2600 level, which happens to be a very strong psychological area. Now, the question for this week is, will this area serve as another buying niche where price action will be respecting this ascending trend line one more time to incite a trend continuation to the upside? Or are we going to be having a situation here where price will breach the ascending trend line, break the key level at 1.26 to incite a sell off in this market? Now, to answer this question, we would need to scale down into a much more lower time frame where I was able to identify simple setups that we can use to guide our trading activity for this week. But before we scale down into the 4 hours time frame, it is important that we take a quick look at the economic calendar. As you all know, these fundamental factors often manifest on the chart in technical patterns and price movements. And by monitoring the economic calendar, we can easily identify potential correlations between key economic releases and specific technical patterns. And right here on the economic calendar, we want to be focusing on economic event from both the UK and the US economic docket. And for this week, we shall be focusing on high impact events. So the first high impact event will be coming in on Monday, July 3rd, and that is the ISM manufacturing PMI from the US economic docket. And from the same US economic docket on Wednesday, July 5, we are going to be witnessing the publication of the FOMC minutes. Then on Thursday, we have the ADP employment change as well as the ISM services PMI. Then on Friday, July 7, we have the average hourly earnings for month on month and year on year, and it will now culminate with the almighty non farm payroll. And as you can see here, we have a series of high impact events coming in for the week, which obviously we are going to be seeing the anticipation of this event reflect on the chart as price action. So with the information we have gathered here, we want to scale down into the lower time frame, that is the 4 hours time frame, where I said I've been able to identify a simple setup that we are going to be using. So right here on the 4 hours time frame, this was what I was able to spot here. In fact, we have a couple of key levels that we are going to be using to guide our trading activity for this week. But the most important one at this juncture is that 1.2700 area, which has also been a major determinant of price action since the second week of the month of June. Now, if you look at this whole structure closely, let me zoom this in a little bit so that we can see things more clearly. You will see that during the second week of last month, we saw how price broke out of that structure, and for the first 5, 6, 7 days, we saw how that level became a strong buying niche where sellers struggled to break through the structure. And it was not until the previous week when we finally saw a huge bearish engulfing candle slicing through that structure for the first time to incite a move back into that key level at the 1.26 that we identified on the daily time frame. Now, close to the end of last week's trading session, we saw how price action came back into that zone along the 1.27, and you would agree with me that we are at a critical point in the market right now. So, depending on how price action reacts to the 1.2700 level in the early hours of the new week will determine how we are going to be positioning ourselves, at least for the first half of the week. Then, one interesting thing about this key level at the 1.2700 level is the fact that it also shares a confluence with that descending trend line that we spotted here, which has been supporting the bearish momentum for the last couple of weeks, as you can see here. So, now the question going into the new week at this juncture is to see Will the selling pressure hold again, that is price action respecting that descending trend line to incite a sell-off in this market? Or are we going to be seeing a situation where price will continue to remain above the structure, break out retest of the trend line to incite a trend continuation to the upside? So all this will duly be answered after monitoring how participants in this market will be reacting to the structure during the early hours of the new week. But trust me, I'm going to be with you in the comment section as always. After monitoring how participants in the market will be reacting to the structure during the early hours of the week to give you an insight into what I think is likely going to be happening. If you have found the content helpful and useful in making your independent trading decision for the week, I would greatly appreciate your support by giving the video a thumbs up. Your likes are valuable to me and helps the algorithm promote the video to a wider audience of traders who may find the material beneficial. Thank you in advance for doing so. If you haven't already, I encourage you to follow me on this channel for more of this content. By subscribing, you would always stay updated with the latest ideas I share and, of course, receive notifications whenever I upload new videos and commentaries. See you in the comment section on Monday morning as we get prepared for the new week. Do have a wonderful and beautiful evening, everyone. Bye bye.